Hi, thanks so much for joining in. My name is Alex Matthew and we're discussing Your Money Matters on NDTV Profit because we understand that your money matters. Now, gold is something that a lot of people own, and in the recent past, and I'm talking about over the last 5 years or so, there's been an increased interest in owning digital gold. Of course, the government had a very interesting bond in the form of the sovereign gold bond, which was sort of incentivizing people to shift away from physical gold as an investment and investing in digital gold. The thing is, there are no issuances that are lined up. That's dried up. So in that context, what should you invest in if you are looking to invest in digital gold? That's what we're going to be starting this conversation with today. My colleague Malika Mishra has this report to talk about the sovereign gold bond scheme and why it might just have stopped.
The sovereign gold bond, or SGB, which was first introduced in 2015, has been a major success. But there hasn't been a fresh issuance for quite a while. And what's more, there may not be another issue going forward as well. Why is that? Well, we'll get into that in just a bit, but first let's talk about the key details. The SGB is issued by the Reserve Bank of India on behalf of the government. It was introduced to give Indians an alternative to buying physical gold. As an incentive, a biannual interest payment was introduced and the capital gains at the end of the 8-year holding period was made tax-free. The interest rate, which was set at 2.5% payable semi-annually. An earlier redemption was allowed after 5 years, but in this case, capital gains would be taxable. But how would you get capital gains? It's very simple. The issue price of an SGB would be based on the prevailing price of gold. At redemption, the payout would also be based on the prevailing price of gold. And while the minimum that you could invest was a gram, the maximum went up to 4 kgs in a year and 20 kgs for trusts. Now, sounds too good to be true, right? And yet, this is exactly what the government did. It worked out great for investors. Gold prices have risen substantially over the past 10 years, especially since 2019. Over the past 6 years, prices per 10 grams of gold have risen from 35,000 rupees to 84,000 rupees. That means the government has to shell out a large amount of money at redemption. This is problematic, especially because there was no underlying physical gold for SGB. The bottom line is that issuances will no longer take place, and that means investors looking to buy gold must find alternatives.
So that's what you need to know about the sovereign gold bond scheme. The thing about it is that gold prices are on the up and up. And in fact, we spoke with Kunal Shah of Nirmal Bang earlier today, and he spoke about $3,000 per troy ounce of gold in the international market. That's a possibility. Not 5 years from now, in fact, this year. Listen in.
We had a target of $3,000, 3,000, and second target was $3,050. The pace of gold's rally in last 1.5 months, already in 1 month and 5 days of February, gold price are up by 10%. So I was expecting gold to give 15% return. Already it is in 35 days, it has given a return of 10%. So I'm expecting still a gold to go up. The present gold spot prices are at 28.55. I expect it to test $3,000 by the end of the year.
All right, so we have established that the sovereign gold bond scheme is not an option for you, at least not in the form of a fresh issuance. And we have also established that gold prices might be heading higher. What role does gold play currently in the makeup of your portfolio, and how should you invest in gold? We're going to talk about that right now. And joining me is Kirtan Shah, the Managing Director of Credence Family Office. Kirtan, thanks so much for taking the time as always. And from your understanding, why is gold price going up and why has it risen in the recent past?
Alex, thank you so much for having me on the show. I think there are 4 or 5 major reasons why gold is going up and everything seems to be supporting gold prices. First is, of course, the trade war that Trump started. And you will typically see whenever there is geopolitical instability, it always favors gold prices in sorts. Also, with the trade war, what is expected is that imports will become costlier for US and hence inflation will go up. And whenever inflation goes up, because gold is hedged to inflation, gold is also going up because of that anticipation that inflation will go up. Also, I think since the Russia-Ukraine war, we've largely seen how central banks have been buying gold continuously month after month because there is this huge wave of de-dollarization that everybody wants to ride. So I think there is a huge buying happening from the central banks as well. But I think in context of India, there are two reasons why gold probably in the Indian context looks a little better is because of rupee depreciation and rates falling in anticipation. So whenever rupee depreciates, the same gold that you could buy at $1.88, and if rupee becomes 90, the gold becomes 90 and hence expensive, right? And also when interest rates fall, fixed income investors typically look out for options to invest somewhere else. And hence interest rate falling and rupee depreciation are more India related data points because of which the Indian gold returns are expected to be slightly higher than the international gold markets.
Why people are in India buying gold quite aggressively. In fact, the latest data from the World Gold Council, I'm sure you've seen this as well. I'm just going to point that out. In 2024, it's risen by 60% in value terms to $18 billion. That's 1.5 lakh crore rupees in just 1 year. And also in physical terms, that number stood at 239 tons in India, which is the highest since 2013. So essentially, Kirtan, you have global central banks that are competing with Indian buyers of gold at this juncture. But really the question is, how do you invest in gold? Because clearly a lot of people are still buying physical gold. From a personal finance portfolio building standpoint, is that a good idea?
I would urge people to look at either doing a gold mutual fund or investing through gold ETFs, because the other two ways through which you invest in gold may not be very pocket friendly in the long term. Let's say, for example, you do physical gold. So while you do physical gold, there is going to be a spread between buying and selling price. So you will always get gold expensive than what the actual market rate is. Or when you sell, you will get a price lower than what the market rate is. So that spread kinds of eats into the profits that you would make. And also there is a 3% GST when you buy physical gold. Similar story with digital gold when you buy gold through a lot of these apps, right? And hence, in my opinion, if at all you really want to buy gold as an investment and not as a jewelry, then you should rather look at doing gold ETFs or buy through gold mutual funds, Alex.
Okay. We'll come to the taxation of it in just a bit, but let's, for a brief moment, delve into the sovereign gold bond. It was a spectacular product and a lot of people got advantage of it. But the thing is, it's not available anymore. However, it's available in the secondary market. Should you contemplate trying to buy it in the secondary market? What are the pros and cons, Kirtan?
Alex, I think this is a very interesting proposition, but I don't think this is really for a retail investor. I'll give you a data point. If I'm not wrong, as of yesterday, there were some 61 SGBs listed on the exchange, out of which there are 6 SGBs which are trading at a discount. Now, of course, you would want to buy it at a discount. Only then you will take advantage and get it at a price lower than the market price. So out of 61, there are only 6 which are trading at a discount. 55 of these other bonds are trading at a huge premium than the current market price. Now, the 6 that are also trading at a discount, which you would want to buy, the yield to maturity on these bonds is also negative. What that typically means is that even if you buy into those bonds, assuming that they are available at a discount, you will still end up making lower returns, including the 2.5% interest that you are going to make. So invariably, what I'm saying, long story short, is that all of these 61 bonds available in the market are pricing in the 2.5% that you are supposed to receive. And also that new issuances are not going to come up, and hence they're trading at a price either very premium or at a price which it does not even make sense looking at the current market price. So I would sincerely suggest that if you are not a very professional investor who understands how to select between these 61 bonds and how to benefit out of it, you might as well not want to do secondary market.
Okay, but hypothetically, the advantage if you buy into a bond in the secondary market, Kirtan, the benefit of capital gains tax if you continue to hold till maturity still exists?
Yeah, absolutely, that does. So that's one advantage. But versus that, the disadvantage also is that, depending on what maturity have you bought into, this product will mature at that point in time, right? So you might get this benefit, which is the maturity tax advantage, but the product will mature and you will have to again buy into something else if you want to hold it beyond the maturity of the product. So yes, the tax, capital gains tax definitely is a big advantage of buying into the secondary market. But if if I have to look at, and what I was trying to suggest was that these 61 bonds that are trading, they are trading at a significant premium, which is accounting for all of these benefits that people are going to make. So there is not a lot of arbitrage that you will generally end up making, even if you buy it from the secondary market and the maturity is going to be tax free.
No, it's a point. It's a point well made. Before we get into the tax aspect of it, of buying the digital gold in the other forms that you suggested, let's talk about the thesis here, because ultimately gold prices, I think it's an accepted fact that eventually it will go up as other asset classes do. The question is how much and over what period of time. And unlike other asset classes, and unlike what a lot of people believe, it's not a linear uptrend in gold prices. There are a lot of factors that deal with it. So if there are people that are interested in going out and buying gold because the prospects are good, how would you explain to them, Kirtan, what the prospects are over the slightly longer term? And here I'm talking about not just 1 year, you're talking about 3, 4, 5, 10 years.
I think, Alex, you've rightly made a very interesting point that, gold is also not an asset where the returns are linear. It will also have its own cyclicality, which the investor community will have to understand when they buy into gold. I would like to share some light on some past data by which probably the investor community will be in a better placed position to try and understand what to expect out of this asset class. Now, if you look at the last 20 years, and compare it with, let's say, an NSE 500, you would see that gold has been able to beat 57% of the stocks listed on NSE 500, which means the return of gold over the last 20 years has been better than 57% of Nifty 500 stocks. Point one. Point two, even if you look at it from the 2000 onwards, which is, let's say, the last 24 years, index on the equity side has given 13.4% CAGR, whereas gold has given 12.5. So Nifty or the equity index has only been able to generate 0.9% higher than gold, but gold has been able to generate this kind of return at only 70% volatility of that of Nifty, which means with much lower volatility, gold has been able to generate almost similar kind of returns that equity has been able to generate. Okay. And if you look at the last 2 decades, you will understand that there is not even one single year where gold has given double-digit negative returns. So what I'm trying to preempt or probably mention here is that while you look at gold as an asset class, you will have to look at it from a longer time frame. And from a longer time frame perspective, with lower volatility, gold has been an asset class which has had the potential to generate quite inflation-beating returns, and probably in some cases as good as equity returns in the longer time frame.
Okay, so the clincher then, do you buy and so you've said gold ETFs or gold mutual funds. What's the tax treatment of that? And should you potentially even look at a multi-asset fund as an option if you're not too bullish on gold, but you still want the exposure?
So if you take gold in physical mutual funds or probably any other digital form through an app, and you hold it for less than 2 years, you will be taxed at the slab rate. And over 2 years, you will be taxed at 12.5%. But if you take ETF, the advantage is that less than 1 year will be taxed at 20%, but more than 1 year will be taxed at 12.5%. Right? That's how the tax treatment will work in these products through which you can invest in gold. Now, look, when you buy into multi-asset, what you are typically doing is telling the fund manager that, look, I don't understand, and I give you the flexibility to choose between which asset you think will do well. Because multi-asset as a product, by definition, will have 10% investment in 3 asset classes, and the remaining 70 can be anywhere. So if you choose the product correct, then I think the fund manager here will be able to do a great job allocating between, let's say, a REIT InvIT or a gold or a fixed income or equity, given their understanding of what probably will work in the near and the long term. So if you are somebody who cannot predict where gold prices may move, right, I think multi-asset may be a way by which you may take small exposure, but it cannot replace your gold allocation requirement in the portfolio.
And that's usually 10 to 15%, right, Keetan?
Yeah.
Okay, so fantastic. Thanks so much for joining me today and for this lovely conversation, insightful conversation. Pleasure as always. All right, now it's time for what I like to call Travel Thursday, and I've got an interesting one lined up for you. We are talking about a location that you can visit, that you can possibly put on your bucket list. And this is in a neighboring continent. You'd have to fly across a bit of landmass, possibly a little bit of water body as well. But we're talking about Tanzania. And it's a beautiful culture, it's a beautiful country, but to talk about it is somebody who has been there and who can give you the expert tips that you need to make the most of your vacation. Tanya Khanijow, YouTuber and travel expert, is joining me. Tanya, thanks so much for taking the time. Why have you selected Tanzania today?
Hi, Alex. It's so nice to be back. So I recently visited Tanzania, and it was such a good place to be, to connect with nature, to connect with wildlife, the kind of national parks you have over there, the landscape, everything is just so stunning. And because obviously it's very fresh in my memories also, so I have some good tips for you today.
Okay, so let's talk about some aspects of this. One, is there a good time to visit in your opinion? Because Africa, as we know, is known for its migrations. I think that is something that you have to factor in. And so the time that you go can change your experience quite dramatically. So when is the best time to go and how long should you be willing to spend, Tanya?
Okay, so you can make a trip if you're especially going for the wildlife, anywhere from 5 to 10 days. And yes, you're right. There is a very major proponent of the migration, which you have to look at. But what I've been told by my guides, and I had some very experienced guides with me on my trip. In fact, fun fact, the guide who was with me on my trip was also Ranveer and Alia's guide when they visited the Masai Mara.
Wow.
So they were very nice and experienced. And they told me that actually there's no amazing or best time because all year round, except for the rainy seasons of November and December, all year round is good time to visit, especially if you're coming to the national parks. Now, that being said, the migration does play into the picture because the wildebeests and the zebras and the antelope, some of them, the water bucks, for example, will migrate from Masai Mara to Serengeti and Serengeti to Masai Mara. Now, this usually happens in at least Masai Mara on the Kenyan side, around you would hear June, July, August, these months. And the reverse of it happens when they come back to Serengeti. And that happens between December, January, February. So I was there in January, and that was actually a very good time to be there because not only was the landscape extremely lush and green from the rains, but also all the zebras and all the wildebeests. So back on the Serengeti side. So that was a very massive spectacle to watch because you get to see so many wildebeests and zebras in numbers. And it's just amazing to see them feed on their grass, go about their regular days while they're paparazzi trying to click pictures. And also because of their increased activity, you'll be able to spot a lot of the predators as well.
Yeah, so and you already painted such a beautiful picture. The question is, a lot of times when you're traveling to these places, you try and get the shoulder period, right? In order to make the best of it, you want a lot of the action, but you also want the benefit of not traveling at peak time. So what are the prices like if you are traveling around that period that you did? And what do you need to bear in mind in terms of air tickets, in terms of visa and stay?
Okay, so the air tickets around the time when I visited was actually very good period, like I mentioned, because the landscape is green, but also it's the shoulder season because most people travel to, especially, and look at it as a block. Like if we're visiting Kenya, we can also cross over the border, visit Tanzania maybe. So Masai Mara in Kenya is very popular during the June, July, August, September period because of the migration of the wildebeests across the Mara River. So at that point of time, it's the most expensive to visit. And if you're traveling around now or between January, February, March, the air ticket is especially quite economical. You can get direct flights from Mumbai for 40,000 for a round trip, which is what I got. And then you have to pay the visa fee and hotels and lodges also, they hike up during the peak season, but around now you can expect anything for the mid-range. At least you can expect something like $250 a day.
Okay, $250. And so obviously you are going there to see the wildlife, but there's a lot more in the way of culture and stuff to experience. So would you say that you can still have a great experience if you don't want the wildlife, or should that be the greatest attraction?
I think that is the greatest attraction, because you have one of the biggest bucket list national parks in the world for any traveler in Tanzania, which is the Serengeti National Park. If you're going to Tanzania, there's no way you're not going to want to see it. And for a lot of, I think, adventure enthusiasts, you can also consider climbing, for example, Mount Kilimanjaro, or just going to Ngorongoro crater. But the wildlife does play into the picture. It's a very major component of any trip to Tanzania. And you cannot come back without seeing the Serengeti National Park. And the best part about this national park is not only the wildlife, but also how the landscape is so different from anywhere else in the world. It's a grassland, right? So you'll be able to see the horizon, the sky, and the exact meeting point of it. It looks like a Windows wallpaper. The landscape is just stunning, out of this world. And the bonus is that you also get to see animals in their natural habitat. And if you are lucky and patient and also very observant, you can get to see like live hunts, or animals in their, playful nature, or going about their day, or hanging out on a tree, for example, leopards hanging out on a tree. So witnessing all of that, it really makes you feel like you have a deeper connection with nature, and I think it really fits into any trip.
So with that in mind, how much of the time that you have suggested, 5 to 10 days, how much time would you suggest experiencing this national park?
At least 2 days would be the best to experience the national park. So the way I planned my trip was that I was on a self-drive trip with a company, and they host self-driving trips across Tanzania, Kenya, a lot of African countries. And they were able to guide me really well. And also, I was behind the wheel inside the national park as well. For me, that was the biggest bonus, because never experienced that before. Mostly when you're going to these national parks, you're inside the safari campers. But 2 days at least we spent inside the national parks. And you can also camp. You can stay in these mid-range resorts that I just mentioned. And after that, you can also explore a few more places. Like I went to Tarangire National Park as well on my trip. So I entered from the Kenyan side. That is where I could avail the 40,000 round trip ticket to Nairobi. And from Nairobi, crossed the border into Tanzania, then went to Tarangire National Park. From there, I went to Karatu and visited the Hadzabe tribe. Now, this tribe is also very interesting, because they are hunter-gatherer tribes, and they've completely retained their original customs, culture, and they still live in the way that ancient, probably humankind lived. So that was a very interesting experience. And after that, I went to Serengeti. So this entire itinerary was about 7 days. I split 2 days between each of them, and one, of course, for the travel.
All right, and that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. Lots more coming up on NDTV Profit.